Welcome back to U.S. Farm Report. Chip Nellinger and Matt Bennett rejoining us. And we're talking about cattle prices before USDA's cattle on feed report came out late Friday afternoon. But the expectation headed into that cattle on feed report that we would see inventory down just slightly from a year ago at 11.944 million head as of November 1st. But when you look at right now, what will be driving cattle prices? A lot of questions on when we will rebuild. We're seeing moisture enter some of these key cattle production areas lately. Chip, I will start with you. What do you think your outlook is for cattle prices in 2025?
Well, I think there's a lot of optimism built in currently, right? And there's a lot of hope that the cash market is going to continue and push above 190 and have this, great effect and rally the futures. I would tell you this, going into the end of the year, the funds have a massive long position up. There's a lot of optimism out there around stronger cash prices. I'm a little fearful, though, that we've already started due to these high prices to cut into demand a little bit. Obviously, the U.S. consumer, with inflation has been pinched a little bit here. There hasn't been much talk about it and about these potential tariffs. Mexico is not out of the woodwork yet on having potential tariffs on top of the Chinese tariffs, which are likely coming in January, possibly February. They've been, obviously, Mexico's a huge player in our both pork and beef exports, but China very quietly over the last couple of years has become very large as well. So I think that the cattle market there could be some upside. I'm not saying that, but I think bigger picture, you got to assume, and I do, that we're towards the upper end of the range in here. But the first of the new year will tell you more. I'm just fearful that we're starting to build the numbers, not necessarily the cattle herd itself, but that the demand's a little bit shaky and the numbers are big enough that it could cap us going forward.
Yeah, I mean, and Matt, how resilient demand had been has really been the story of 2024. But you look as we close out 2024 and head into 2025, do you agree with Chip?
Yeah, I mean, here's the thing. Whenever you look at, like Chip said, the funds have been long. I think the funds have kind of grown weary of this long position. And, here's the thing. I'm not saying they can't push this thing higher. I think a lot of folks felt like we'd see even tighter numbers this fall than what we've seen on cattle on feed and placements. They just haven't materialized. I mean, you look at the National Drought Monitor and it'll tell you that there's still some pastures that need some more rainfall. No doubt we've had rain in wheat country and cattle country, but do we need more before next spring? And to really feel good that someone's going to say, hey, I'll go ahead and put this heifer out on pasture. Maybe we can build numbers then. Here's the thing. And if you're going to offer someone for 400 pounders, people are talking $1,600 plus. I mean, it's unbelievable to get $4 a pound for a feeder. I don't know. I just feel like this cattle market has got more risk to the downside than to the upside. So, if I'm sitting on a couple feedlots full of cattle, if nothing else, put a floor under them because, again, I mean, what do you have to gain here? If this market rolls over like it did last year, I don't think it will, like $35 drop. I don't think that's going to happen, but it could. If the funds decide to puke, this thing could be really rough. So my personal opinion here is to stay as protected as what you possibly can. It doesn't mean that you're, bearish. It just means that you're being smart on a business perspective.
Matt Bennett, Chip Nellinger, thank you. Happy Thanksgiving to both of you. We need to take a quick break, and then we'll check in with Machinery Pete next.